Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. Trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash, and portfolio manager and financial advisor in Edmonton. Hilliard, Happy New Year.
Happy New Year to you.
Hilliard, taking a look at 2019, what do you think were the most positive things about that year?
Well, I think the economy in North America continued to be stronger than surprised people, I think, quite a bit by the continued strength. Even though the Federal Reserve in the U.S. felt it necessary to cut interest rates, the stock market continued to do extremely well. In fact, towards the end of December, the U.S. stock market was up 27%, which is one of the best years on record. And it's surprising in that it's the 10th year since the global financial crisis in 2009, and now we're heading into the 11th year. And usually the recoveries don't last that long. So that was the biggest surprise of the year, I think, in terms of investing anyway. Of course, the other, I guess you could say, related surprise would be that the issues that the President of the United States, Donald Trump, has with impeachment and some of the revelations over Ukraine and things like that didn't really impact his approval ratings. Although his approval ratings are low, they didn't go a whole lot lower, and it didn't impact the stock market, which is, I'm old enough to have lived through the Nixon impeachment, and although I wasn't much of an investor because I was too young, but I remember it quite clearly, and the stock market went down 50% in the space of about 18 months, which was one of the most severe bear markets ever, and I'm sure it was related to the impeachment of the president, and it had people worried about the future and all that kind of stuff. In this year, 2019, it doesn't seem to have bothered the markets at all, which is surprising.
The markets now, have they been manipulated to support the U.S. government, or is it despite the U.S. government the markets have done well?
I don't think the market is so. To give you some scale here, the U.S. stock market is $30 trillion. It's almost 60% of the world stock market. The world stock market is about $55 trillion in total value, and the U.S. stock market is $30 trillion. So it would be very difficult. There would be no way that anybody could coordinate a campaign to keep it supported. I think it's more likely that the other markets, whether they be Europe or Japan or the emerging markets, which is dominated by China, are doing quite poorly in relation. So people have gradually more and more moved their money into the U.S. market. And it's not just the U.S. market, actually. It's kind of interesting. There's 5 stocks primarily in the technology sector, Microsoft, Alphabet, which is Google, and Apple, and 2 others that make up about 20% of the value of that market. So it's absolutely crazy. Like just 2 of them, for example, Apple and Microsoft, are $2 trillion in value, and the whole German stock market could be bought for less than the value of just those 2 companies. I don't think people are aware of how dominant the U.S. market is, and how dominant just a few stocks are in the U.S. market. So, Amazon, one of the 5, for instance, has become one of the most valuable companies in the world, and it hasn't been around that long. It's been around for a relatively short time. So it's, I guess it's the internet. I guess it's the companies that were the first movers in the internet that were able to cash in on some of the aspects of the internet that people like, and they've become extremely valuable. Now, there is a movement in the U.S., political movement, to limit the dominance of some of these five, especially Amazon and Google, and probably Facebook, and put in some restrictions on them, much like they did with AT&T in the, I guess it was the 1980s, and Standard Oil going back to 1900, because all those companies came to dominate the markets that they operated in. But that would depend on certain people getting elected, and then them being able to get it through the Congress, the new rules, which is unlikely. So I think so far the market's ignored those warning bells that are sounding sort of fairly faintly, and they're quite a ways off in the distance. But as long as the party continues, as somebody said, as long as the music's playing, you have to get up and dance.
We'll have more with Hilliard MacBeth right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, looking back at 2019, what would be some of the big disappointments? I know marijuana stocks did not pan out the way a lot of people thought.
Yeah, I remember at least one client coming in and telling me about how much money they'd made on the marijuana stocks. Of course, we didn't recommend them. We didn't buy them. So if clients bought them, they had to buy them someplace else. And I remember begging him to sell but it was right around a year ago, I think, and but of course he didn't want to sell because he had millions of dollars of capital gains, and he would have had to pay tax on that. So anyway, that's an unfortunate story, and there's been disappointments in other areas, but most of the year has been very positive. I think probably one of the disappointments that people would look at if they were looking at is the overall performance of value stocks. So there's sort of the investments are sort of divided up into two categories: growth and value. So growth is companies like we just talked about, Amazon and Microsoft and Facebook, that have become so valuable. And but value investing, which is what I grew up with and what I prefer myself, is where you look for bargains. And looking for bargains has just not paid off recently. So that's been, the value investors have really been taking a beating. And it isn't just last year, it's the last several years that they have been waiting to get paid for being, doing all the work of combing through the financial reports and the annual reports and figuring out the values of these companies and then buying the ones that look undervalued or underpriced or bargain. And it just has not paid off. The companies that have been great value and have been trading at bargain prices have stayed there. And the companies that are expensive, like Amazon, great company, but always has been expensive, have just continued to get more and more expensive. And the gap is getting wider and wider. So that for value investing, it's been a really difficult last 2 or 3 years.
I guess the only bargains would be if you were looking at foreign stock exchanges.
Yes, for instance, maybe to move away from the stock market a little bit, but think about real estate. There haven't been any bargains in real estate in Canada, and even in the U.S. there haven't been that many bargains in real estate, except for a brief time after the 2009 financial crisis and the collapse of the subprime mortgage business. But if you go to Italy or Spain or some of the places like that, you can find some really great real estate bargains. Eastern Europe, lots of places where really wonderful values are available. But people are, I guess, for good reasons, reluctant to do that. One of the problems with Italy, of course, is the unemployment situation has been very poor there for quite a while, and so the chances of finding a job are really low. But that could change as well. But so far, there hasn't been an exodus of money out of the U.S. Into any other. If anything, it's just exactly the opposite. The money's been pouring into the U.S. and into U.S. Stock market values. Now, for people that have been sitting in safe, so-called safe investments, government bonds and cash related, like T-bills and that sort of thing, they've been paying a very high price for their desire for safety, and that doesn't look like it's going to change anytime soon, unless we get a big stock market correction.
Well, in Europe, of course, negative interest rates on bonds. I've never understood why you would buy something that 10 years later is worth less than what you put in. How do you get anybody to buy a bond?
There's of course the average person it isn't really that affected by that much. It's the big institutional investors that have 100 million euros or 1 billion euros, and of course they're stuck with the necessity of having to sometimes accept a negative interest rate, because if they want to stay in that currency, they don't have any choice. So the euro and especially the Swiss franc, for example, was so strong that the Swiss government brought in negative interest rates. I think now we're up 7-8 years now, something like that. And they've kept them that way for a long time, and they recently defended their decision to do that. So they just don't want a bunch of money pouring into the Swiss franc to try and take advantage of the so-called safe haven aspects of that. In Japan, for example, the interest rates have been close to zero for probably 25 years now, and yet people still like to hold money in the Japanese yen when they feel like other currencies are risky. So that it'll be interesting to see what happens if the U.S. dollar ever goes through a big correction. We could see some very interesting things happening with negative interest rates, even coming to North America. Although, it's always interesting when the government makes a statement saying we will never have negative interest rates or anything like that. You almost think, well, as soon as they start denying it, it's probably coming soon. So.
Well, in Japan, a lot of people still don't trust the banks, and it's very common for folks to have a safe underneath the bedroom floor that contains thousands of dollars, because they'd rather just hold it at home and know where it is rather than see a bank go under like they did after the war.
Yeah, and I think the biggest savings in the at least not that long ago was in Japan. They used the post office as their savings account, so yeah. they don't trust the banks to save their money. But the interest rates on like at 0.01%, I remember checking. It takes 100 years to get 1% of interest. So it's just it's crazy. It certainly makes the magic of compound interest investing not very magical.
We'll have more with Hilliard MacBeth right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, what kind of trends do you see ahead in 2020?
Well, I think we're at the getting close to the end. This is the start of the end game, if you like, of the recovery in North America that started after the global financial crisis in 2009. It's been a fairly weak recovery. One of the strongest parts of a recovery in the U.S. has often been home building, and home building has been unusually weak for pretty much the whole time, except at the very high end of house building. So it's possible they might keep it going a little while longer, but this is, the average length of time for recovery, and the average length of time between stock market corrections, and the correction is defined as being 20% or greater, is 4 to 5 years. And, the longest, prior to this one was about 9 years. So now we're about to start our 11th year. So obviously this recovery, even though it has been, somewhat mild, is very long in the tooth. And so we would expect that 2020 will be, a time of turmoil in the markets. The other thing that hasn't happened, besides that there hasn't been a recession, there hasn't been a stock market crash, there hasn't been a war. And, this is very unusual in the sense that the U.S. has almost always been at war for most of its history. So, I don't want to be predicting war, but it certainly is an unusual time that you'd have such a long stretch. And certainly the 8 years that the previous president was in, plus the 2 years now, coming up to 4 years now that Trump has been in. It's the longest stretch where you haven't had any kind of significant conflict. I know there's been arguments about withdrawing troops from Syria and that, but that's really not much at all. There's always troops all over the world stationed, working for the American military. But for them not to be in an active, hot conflict for this long is very unusual.
Well, at least not new wars. They're still trying to extricate themselves from Afghanistan and Iraq, but
yeah, exactly. And usually it's interesting because a lot of the presidents, you sort of wonder if they, I remember the movie Wag the Dog, and the premise of the movie was that the president, and it was sort of, I think, loosely based on Clinton and a war in Eastern Europe, but they sometimes get drawn into these conflicts just before the election, because the commander-in-chief looks like somebody you should vote for when he's involved in leading the troops into a war. And I know that sounds a little cynical, but unfortunately, when you look back at the history, it seems to have happened. And the ones that didn't do it are often the ones that don't get a second term. So that's one thing you could watch for if President Trump's approval rating. He can't really afford to have his approval rating slip from the current 43%. That's about the minimum that anybody's ever had 1 year before an election and still gotten reelected for a second term. If it slipped anything much below 43%, he or the people around him might be tempted to sort of try and find an armed conflict to make him look good as commander-in-chief, but hopefully not. Hopefully that doesn't happen.
Is there much optimism in Alberta, where unemployment among young men has hit 20%?
Alberta, I think people in Alberta are getting really worried about the economy. It's, there isn't, a year ago, if we had this chat, we'd be talking about, well, there's no access to pipelines and stuff, but in the year since then, there hasn't really been any progress on pipelines. But now it's even more kind of existential in the sense that even if we had the pipelines, are people really going to want our petroleum? The U.S. has now become a net exporter of oil on some days and some months. They do import about 3.5-4 million barrels but they now are producing a lot more as well. The production has gone up to close to 13 million barrels now. So, and they've started to export some of that. So they actually import diluted bitumen from Alberta, and it feeds into the refineries that are set up to take advantage of that. And then they now are producing a lot of light sweet crude from the West Permian Basin, which this then goes into ships to be exported and goes to a different type of refinery. So it's a dangerous time for Alberta in that respect, because they don't need us as much as they used to. On top of that, Alberta has really been powered by real estate, residential real estate, and construction, and not just construction for housing, but construction for office towers in Calgary and oil sands in northern Alberta, and all of that is winding down. There are a few projects still underway, but they're getting towards the end of their life. And interestingly, StatsCan reports the number of people employed in construction in each province. And the peak in Alberta was 275,000, and it's only come down a little bit, probably around 255,000. But in 2005, it was 150,000. So if the slowdown in construction continues, and it looks like it will with the new government, the Conservative government under Jason Kenney, who's been talking about cutting back on government capital expenditures, then you could see another 50,000 or even 100,000 jobs from the construction sector disappearing as well. And of course, that would just add to the unemployment number. So it's kind of a grim outlook in Alberta, and unfortunately don't see the optimism coming back anytime soon. I know in BC there's an LNG plant under construction on the west coast, and Toronto, Ontario and Ottawa seem to be still doing very well. But Alberta, Saskatchewan, things are looking like it's going to be a tough year in 2020.
Hilliard, all the best for the new year.
Same to you and your listeners.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. And Hilliard, for people looking for the book in their local bookstore, what's the difference between the first and second edition so they can pick up the right one?
So if you're looking for the second edition, which is the one to get, it's got red on the When the Bubble Burst is all in red letters on the front, and I'm sure all the bookstores probably have the second edition now. It's been out for a year or so, and I added in the second edition, I added quite a bit of new material. It's almost like a new book. I think I should have called it a new book rather than a second edition, but so encourage people, even if they've read the first edition, to and the other thing I would point out is people can subscribe to my weekend note, which comes out every week, just by following me on Twitter, and then finding the link. Usually comes out on Friday afternoon, and then they can sign up for that, or they can go to the website MacBethMcLeod.com, MacBethMcLeodWealth.com. My
guest again, Hilliard MacBeth. If you have any questions for Hilliard or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Happy New Year.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.